Good morning all and welcome to this morning's video. So I apologize in advance for the feedback which is likely on this video. I just sound checked this and once again for reasons unknown there seems to be a lot of feedback. I've no idea why that is. My equipment, so to speak, pardon the expression, actually stays in the same position every day. I don't move anything, and then some mornings there's feedback on these recordings and then some mornings there's not. So make of that what you will. I'm not a technician, so my apologies for that, but it is what it is. Technology is a strange thing. On the subject of technology, we shouldn't have any mouse issues today because I found the charger cable for my mouse, so that is currently on charge, so we shouldn't run into that issue. If we do, it is what it is. But anyway, Sugar USD is the pair I've got on watch today. I've just taken the other three pairs off of watch because literally price action is just messing around. It looks like it's forming something more complex, as has been the case for about a year and a half now. As I said, for a year and a half, almost nothing has shaped up at all. Literally, price has just been consolidating, getting close to the areas of value, selling off, rallying, and there's just been literally no way at all, almost at any stage, to actually get involved in a trade of any description. Certainly not where the pairs that I've had on watch are concerned, but that's trading. That's why I don't rely on this as a sole source of income, because it's too unreliable to provide you with an income. So it's just I just treat trading as a bit of a side hustle, okay, and that way I don't end up in the situation where I upgrade my life only for trades to not actually develop or shape up. I invest in other things. So if trading, if the entries shape up, great. If they don't, then my hands are not tied. I'm not reliant on an income which you cannot guarantee whether it comes in or not. So Sugar USD daily chart. Let's have a look at this. So I have a webinar to attend at 7 o'clock. It is currently 6:26 a.m. as I speak. So we have, as I said previously, we've had this high here, we've had this high here, we've had a near miss to it. So price will likely gravitate back towards either one of these two highs, okay? And the clue, okay, with the exception of including this near miss here, this near miss to this high and this high, was also, once we got down to this area, we see the same repetitive. Okay, let's try that again. There we go. We see the same repetitive market behavior. Okay, but even though you can see, hopefully now you can see, or how repetitive price action is, it just doesn't guarantee you an entry. That's the that's the problem with trading, is that you can be as technically and as psychologically savvy as I am, but that still doesn't guarantee you an entry. Okay, so we have this structure here, and you can see this. Okay, so we have a reversal structure with the 1, 2, 3 middle section. Okay, we usually break below if we're going to move to the upside on the higher time frames at least, and that you can see here we only just kind of tap it. So it's no surprise to me that we get this, come back down, break just below, wash out all the orders, and then rally to the upside. And you can even see a mini inverse version of this on the flip side. The same psychology here. Same thing again, okay? Middle section, taps into the high, breaks just above, catches people the wrong side of the market, and then moves down. So when we started to push up from here, that was a clue that we were likely to push up to take out this near miss, okay, which near missed to both of these highs, okay, and there's your near miss there to these lows, okay. So it's the same thing over and over again. And I talked yesterday about how this was the more likely that price would gravitate towards, because in both instances there was a bit of a sell-off. Okay, we have a sharp sell-off here, and we have a sharp sell-off here. This sharp sell-off is bigger than this one, suggesting that there's more liquidity here. Okay, also, when we got to this low, after this sharp move, the sharp move up and the sharp move down, we correctively broke through this low, whereas in this case, we absolutely smashed through the previous low. So once again, that's another reason why price will likely gravitate back towards here and not necessarily here. Also, this low here that price smashed through was a sharp move. Okay, there was undoubtedly, we don't know how much, there would have undoubtedly been a lot of order liquidity here. Okay, so when we completely smash through a low where there's a lot of liquidity, okay, and we don't respect it, that's another sign that the price will likely gravitate back towards here because of how much liquidity is likely there. And sure enough, when we come up to here, okay, we completely smash through this high, disrespecting it, and gravitate towards that high. And we also have this 1, 2, 3 last leg, which mathematically, if we assume that the impulse correction, the continuation leg out of all of this, is usually about the same length as the preceding impulse, that kind of lines up with there. It's slightly short, but usually it's about 90% of the length. Whereas if we just take it to there, okay, if it was to have stopped there, that would be significantly shorter. Okay, so if we just so that high there would have been about 60% of the move, roughly. Okay, so it's not surprising to me that we gravitated towards that one. So lots of mathematical, psychological patterns at play here. And then, but the clue for me that we was going to come back up, that price was going to come back up, is that we moved down more correctively than we moved up. Okay, we then reached the area. Okay, so why are we coming back up? We're coming back up likely because there's still orders up here, which are likely just above. Okay, and sure enough, we get to the area, we wick to it and not through it. Price tries to sell off, but again, there's likely orders still up there, just above. We tap those orders, and then boom, we get that. So if we just zoom, we can see here we have the aggressive sell-off. We disrespected that low. Okay, bit of a pullback, not so much a correction as such, but a bit of a pullback. We then steamroll through this low. So I was looking at this here as potentially some kind of reversal structure, but it was a bit of a squeeze. So you can see that if we were to plot trend lines on there, okay, they would usually be a bit more parallel, and you can see that that's not parallel at all. So when it squeezes like that, that's often another good indication that we're going to push lower as well, because it's not even remotely parallel. So we completely smash through that low, and we correct afterwards, giving me a clue that this is likely an impulse correction continuation to push lower to the base of all of this volume. Okay, the more attractive area of value for a buy, if anyone's looking to buy that, or this would certainly be, if I was currently involved in a sell here, a sell position, this would be where I would be looking to get out. So if that's where the sellers are looking to get out, then price will likely gravitate find its way back to that area. So you can see we had the weekly close that completely smashed through this low, and we've been consolidating underneath ever since. You will notice that price will left a little footprint there. Price came up, tapped the back end of that previous low, but never broke above it. So that is likely, especially when we come up to here, that is likely where price will gravitate back towards if it's going to continue to the downside. That is the origin of this structure. And you can see that price has gravitated back towards that area. And we've had a little bit of consolidation underneath. Often, this is the buyers getting out of their positions. We usually get a bit of momentum in the last leg. So that kind of makes sense. This, to me, at this moment in time, this here looks like the sellers getting in too soon. Okay, so what this could be is what I believe they call turtle soup. Look that up. I've not gone completely mad. That's where people get in too quickly there. Okay, it then breaks above, they get washed out, and then we see that. So that may be what's happening at the moment. So with all of that in mind, what I will be looking for today is this here. Okay, what I've been looking for quite a while now. And that's, as I said, that's why trading is a game of patience. It's not a casino. I'm sure you'll find many casinos if you want to gamble your money away, but That's not what I'm doing here. So what I'll be looking for is a 1 hour impulse down below the area of value. We're now at the area of value, as I've been forecasting since the start of this week, I believe. And I'll be looking for a 2-touch 15-minute continuation, a correction with 6 to 8 as a minimum, 6 to 8 corrective 15-minute candles, and then I would look to get short on the break of the correction or within it, and then we will be able to manage this most likely down to this low for something in the region of 5.5% there. Okay, and it would likely follow through. If we got a correction that mimic this to some degree, then we would have that kind of mini head and shoulders pattern. And if we followed through, pardon the expression, we would likely follow through with the same level of aggression as we moved up, okay, because these patterns that we look for are often symmetrical in nature as well. So then what I would do is I would set a take profit. Okay, so I would get the Fibonacci tool there. I would measure it from the range. I would set a take profit at the 90% area, which is where price typically pulls back deeper, even if it is going to continue in our forecasted direction. And then we would have 12% down to the low to work with. And I would also simultaneously trail my stop loss. So that is Sugar USD, folks. Hope you've enjoyed this video. Will we ever get another trade again? I'm sure we will, but you just have to be patient. And any money you do make from trading, invest it into things that make you money, and then you're not reliant on setups which may or may not shape up to actually pay your bills. Okay, so that is Sugar USD. That's what I'm going to be looking for today, folks. I hope there's not been too much feedback on this recording. There was quite a bit when I sound checked, but as I say, I can't do anything about that. But anyway, have a great day, folks, and I will see you again in the next video, which will likely be made tomorrow.